Good morning, Checkmate crew. It is opening bell here at the New York Stock Exchange, 9:30 a.m. Today is Wednesday, October 5th, 2022. Mickey Blindside here with the market memo. Okay, first things first, let's get right down to business. We are opening about 1% lower right now, so it is a gap down. Let's put things in perspective here. Yesterday we had a 3% up day, so we're retracing a bit of that. Could it continue down? It could. I have no short-term bets in the market. I just accumulated some shares. You know my trades, HUT and UUUU. I added some of that, and then I sold some short puts at 366 when the VIX was at 32. So that's the only things I have. I don't have any active positions or any swing option spreads or anything like that. I think sitting out of this in no man's land is not a bad idea. Okay, let's look at the dollar first. All right, right now this is what the dollar looks like. The dollar is retracing a lot of its losses from yesterday. Okay, trying to maintain its daily uptrend. All right. And so we're also seeing reports. Now, remember, guys, we've been talking about this since earlier in the year about the possibility of an emerging market credit risk already in Egypt right now. There is a shortage of dollars. So their wheat prices are going up. Their wheat imports are coming down. Okay. There's a shortage of dollars, so it's harder for them to import wheat. So right now there are fears of increased food inflation in Egypt. And I don't think it's just Egypt. That's what's in the media right now. I think there's a lot of countries right now that are going to have some problems. The rice crop this year just wasn't very good. And a lot of the rice producing countries, China, India, Pakistan, they all had really adverse weather. China just had really dry weather, so they couldn't, they had really low rice yield. India and Pakistan had record floods, so that's why their rice yields are low. So we have increased wheat costs in emerging markets, and we also have increased rice costs as well too. So there is this shortage of dollars. And so I think what's going on, and I explained this to you guys weeks before, I think that every time there's a dip in the dollar, someone's going to buy that dip. Okay, there is a dollar shortage, and so if you have got a dollar shortage, you've got some debt that you need to pay later on next year, and you have to pay for your supplies, which you are in short supply of. You don't have wheat, you don't have rice, you need dollars to pay for that, and you have a dollar shortage. I think the dollar is going to get there's going to be dips along the way. So even if we see the dollar coming down, like let's say, I don't know, over the course of the next couple of months, we're still going to see little relief rallies in the dollar as other countries buy dollars on the way down. Okay, so even then there's a big if, even if the dollar goes down, we are going to see these relief rallies as countries restock on their dollar reserves. Okay, so I think that's what we're seeing right now a little bit. We're seeing the dollar coming up a little bit, and so that causes a little bit of quote unquote what I call quantitative fear. So we're seeing some hedging demand. We're seeing VIX is up and SPY is down because of this. We'll see what happens. Again, closing prices. I don't really care much about intraday moves. I care about closing prices. Okay, closing prices. So that's what I see so far. Okay. As far as central bank news, we had the Australian Central Bank come out with a rate hike, but it was lower than expected. I think they were expecting 75 basis point hike on their short-term rates, but instead the central bank in Australia only went up or hiked rates by 50 basis points, if I recall correctly. And so that was, again, less than expected. So I think around the world, we're seeing central banks already start pivoting. Okay, we saw it with the Central Bank of England. The Bank of England started implementing yield curve control. Australia now is hiking rates slower than expected. I'm sorry, so let me correct myself here. It was not the expectation was not 75 basis points. The expectation was 50 basis points, but they opted to only raise it by 25 basis points. Okay, so I was mistaken in the first round. I misspoke. So it is 50. That was the expectation. But what ended up happening was 25 basis points. Okay. So that's the Australian dollar. All right. So again, Bank of England already started pivoting. Now the central bank in Australia is pivoting, or well, at least not as hawkish. So when is the Fed going to do this? Okay. I still think the Fed pivots in the next 90 days. I think it's just a matter of, are they going to do it in November or are they going to do it in December? Okay. Which month, which month do they want to do this at? If I were Jerome Powell right now, he's probably praying that the next CPI and PCE numbers come out low so that he doesn't look like an idiot, and he doesn't lose the little Fed credibility that is left. So I think he's really praying for the lower PCE CPI numbers. Here's the target rate probabilities. Nothing really has changed. We're still pricing in a 75 basis point rate hike for November. Okay, nothing has changed from yesterday. I went over this yesterday, guys. Remember? So it's 75 for November. December, 50 basis point rate hike is what's priced in. Is that what was priced in yesterday too? Yes, it was. So really nothing has changed from yesterday. All right, February, 25 basis point rate hike. Still no change from yesterday. Usually these things don't move day to day. But in the past few weeks, we have seen some big daily moves in this. So it still looks like the market is pricing in. So 450 to 475 is the max range still that the market is pricing in. So we'll see. Okay. I don't think a lot of this will change that much until the 13th when the CPI number comes out. All right. And then that's when we'll see big changes happening. Since we're looking at the bond market, we might as well take a look at some of our other bond indicators. We added TLT to the plan yesterday. Remember, guys? I was looking at this ratio right here, the copper to gold. And if we... no, not TNX. Yes, TNX. Why is this different? Oh, here it is. Okay. Oh, because I'm looking at the daily chart. I thought I was looking at the weekly. Okay. So yes. So the thesis was that this, the copper to gold ratio tends to track and lead the 10-year treasury yield. So I do think at some point it's going to come down. Now, when is that going to happen? I don't know. So we can't just go into this blindly because, it could still keep going up for a bit before it wants to meet with this line. All right. So this could take some time. So I don't want to rush into this trade, but TLT is on my radar. I do want to get long on that, and I did tell you guys that if we see this retrace some of its losses, give me an exhaustion signal around here, that would be a good place to go long TLT, okay? And that goes with our Fed pivot thesis. So I think that is how I'm going to play the Fed pivot thesis. I told you guys last week on a special session that I'm going to try to come up with a way to play it. I think that's the way to play it. Either this or UVXY puts. Because right now, UVXY puts aren't so bad pricing-wise because the VVIX, oh wow, look at that. The VVIX is actually dropping. Well, that's yesterday's number. Hold on, let's take a look at VVIX. VVIX is not bad. That's not bad at all. That is not bad at all, okay? So UVXY maybe a good candidate to play for this. I'm going to keep my position small. I am not going to be a hero on this, all right? Trying to bet on what a central bank does, that's really stupid. But again, I think that right now the reward to risk is getting more and more favorable. And again, a lot of that also has to do with our liquidity data. Yesterday in the junk bond space, we've had a huge advance, 922 advances over declines. I just posted this about an hour ago on Discord. I was a little bit late last night with some other projects that I'm working on, so I was only able to get to this earlier this morning. But right now, junk bonds did make a very large very large advance over a decline, and that's the third day in a row. Will we get 4 days in a row? That's usually a very good sign that a rally continues. Okay. So we shall see. HYG, that's the ticker to look at. It is opening down, but it could recover at the end of the day. I don't know that. You don't know that. Nobody knows that. So let's see what happens at the end of the day. I am sitting tight until I see something at the end of the day. If I see that this recovers at the end of the day, I may leg into some UVXY puts, okay? If I see this recover by end of day, or before the end of day closes. So if I start seeing this recover, I may buy some UVXY puts, okay? They're not too expensive right now. I might go into the Novembers. The November 8 puts. These are lottos, so this is not going to be a big position for me, but I might buy these just as a lotto. With some of the covered call, some of the money that I made from covered calls in the past few weeks, I may use some of that and buy these. Not sure yet. We'll see. Okay, no rush. The reason why I'm not in a rush too for this is because the VIX the VIX futures is it's in backwardation right now. So I really don't want to face all that upward drift. Yeah, I don't really want to face that upward drift. So we got what, 29.60 and 29.33. So it's not much. It's about a 1% backwardation. But still, the math is more in your favor when there is contango. But all it takes is 1 day. That's 1% is not that big of a backwardation. 1 day could reverse that backwardation. So we'll see. Again, end of day. Okay, I want to see end of day what happens before I start making decisions like this. And of course, guys, on the Discord, I'll let you guys know right as I make a position. I will announce it and alert all you guys. So for those of you not in our Discord, hey, check out the links below. Click. It's all free. There's no paywalls. All right. So that is the trade plan. If we get certain indicators from junk bonds later on today with the VIX futures. The 30 and 10, this is something I posted last night. It did get out of, on Monday, it did get out of inversion. So we're now in positive spread territory from 30 and 10, which is a good sign for liquidity. We're also seeing the 10 and 2 stop declining. We're seeing it, just being ranged now since August. So it's stabilizing. We're also seeing the 5 and 2. Looks like it may want to curl up. But again, I don't think this is a trend yet. It just stopped going down as much. Okay. 5 years. We could see a retracement. Okay. And again, I'm hoping that we see a retracement because that's where I will take that TLT trade on the TNX. Again, that's where the risk to reward is very compelling. If it keeps going up, then I can just get out of the trade, right? So it keeps my losses low. But anyway, yes, the 5-year is still going down. It's still in a downtrend on the daily chart. Let's look at ZF. I just want to take a look at ZF and see the futures price. So again, if this goes down, dash for cash. If it goes up, cash is trash, okay? This does not mean, just because it went up just a little bit like this does not mean cash is trash right now, okay? Look at the yields. Remember the yields I showed you? It's still at 3.9%. It's still a viable alternative, okay? These are not like short-term signals, guys, okay? If you really want to take a look at this, look at the weekly charts, okay? You want to see this start going up a couple of weeks in a row. That's when you'll really see a lot of short covering in the market, all right? And the S&P 500 index right now, again, like I said, the reason why, even though the New York high-low line is not improving that much and all this, the reason why I can't short right here is because there's so many in-the-money puts that if the VIX falls, if one market condition changes that's favorable, this thing's ripping up to 4,100, okay? Or at least the 3,900 or over. And again, there's so many in-the-money puts all the way up to 4,000. Okay, it only starts looking a little bit bearish on the front month options expiration. That's the November options expiration, only when it gets over 4,100, and that's where I'm going to buy those puts. Again, there's a reason why I have those levels. It's all based on data. And again, I just don't think the reward to risk is there unless we get to that 41.25. That's really when the reward to risk is in your favor. You can really lean on that trade, and your losses are very small if you're wrong. If it closes just a couple sessions above, or if the market data conditions just keep improving even after that point, then we can just get out at a small loss, okay? I just don't want the price of being wrong to be so high. And right now, the price of being wrong here is just too high for me, okay? So I always think about the worst case scenario. And if I'm not ready to take the worst case scenario, then I'm not taking the trade. It's that simple, all right? So that's why I'm in this wait and see mode. I know a lot of you have been DMing me like, oh, when are you going to place a trade again? When are you going to do something? 80% of trading is sitting on your hands. That's what Jesse Livermore said. Do as he says, don't do as he does, okay? The reason why he lost all his money was because he broke his own rules. All right, he got impatient with his entries. He used way too much leverage. Every single time he lost money, or whenever he lost his fortune, it was always because he broke his own rules. Okay, so do as he says. And what he says is trading 80% of the time is sitting on your hands. Okay, and I do believe that. I believe that is true. Okay, so that's the S&P 500. What other things am I looking at? Oh, let's look at some of our other indicators here, some of our other trade plans. Oh, the Japanese yen. That's what I wanted to talk about today too. Japanese yen is just kind of floating in this area right here. It always wants to get to our buy zone. Well, it teeters on the edge of the buy zone, and then it just retreats from there. And again, what I told you guys was like, this 6.9, this is the Japanese yen futures. That 6930 zone is where I really want to go long on this, but I don't know if it's going to get there or not. I have an alert set at 6940, 6950 or so on my brokerage account. I have an alert set, so I'm going to be watching it as we get down there, and if I want to get long as close to that 6930 as possible. This is a leveraged contract, guys. Okay, leveraged contract. So for each tick. For each tick, it's $6.25 per tick, per half tick. So it's based on the 1, 2, 3, 4, 5, 6, 7th. Is that the 7th? 1, 2, 3, 4, 5, 6, 7. Yeah, that's the 7th decimal place. The 7th place after the decimal point. Okay, and that tick is 0.0000005. Okay, so for each one, that's $6.25. So for 6 digits, so for every 1 point for the digit that's 6 places down from the decimal point, that's $12.50. Okay, so going from 0.00693 to 0.00692. That would be $125 per contract move, okay? So this is a leveraged contract. So that's why I want to get as low as possible, because I don't want any drawdowns, all right? And imagine that move. That move, if it goes up to here, it retraces to 74. Woof. That is a huge move. That's like over a $5,000 per contract move on a contract that you only need $3,000 of margin for. That's a huge move. That's like seeing the S&P 500 go up. I mean, that's like seeing the S&P 500 go up like over 1,000 points. No, not 1,000 points. 500, like 500, 600 points. That's like a 500, 600 point move in the S&P 500 futures. That's a huge move, okay? So there's no need to rush it. There's going to be a lot of meat on those bones. So there's really no need to rush this. I really want the right price to enter. And if we don't get it, so be it. There's always another opportunity, okay? There's always another opportunity, but I'm still looking at this, all right? I think that's a good trade. Oh, another good trade I want to share with you guys. I think we're pretty close. Again, I think the dollar at some point is going to come back down a bit, and I think that's going to be good for the metals space, and especially metal miners, okay? Specifically, I'm looking at GDXJ, which is the junior gold miners. Junior gold miners tend to make these huge moves. I do think that with a stock market rally that's coupled with gold going up at the same time, this could really run, okay? This could really run. So we'll see. I think so. I think this will be a good play, but I want to see it retrace down a bit. Maybe if it gets to around the 28 zone. Okay, so as we see the dollar maybe have these like relief rallies, maybe we'll see this come down, and if it gets to that 28 zone, yes please, I want to get involved in this. I'm ready to put some risk for this, okay? How will I be playing this? I'm actually looking at some leap strategies right now. Maybe this is something that I might go over in the Theta Thunder for leap strategies and poor man's covered calls. I keep telling you guys I'm going to come up with the next episode. I promise I will, guys. Just hang tight. Probably this weekend I'll probably publish it, all right? I said that last weekend too, so I guess we'll see. But here is, I think that I'm going to have to take a look more closely. Wow, those spreads are terrible. Yesterday the spreads weren't so bad, but I don't know why today it's doing this. I tend to like higher deltas. And I like to keep it to a third of the price. So if we get them to 28, a third of that would be, I like to get at least 3-to-1 leverage on this, up to 6-to-1 leverage. 6-to-1 leverage at 28 would mean that we have to get in under $5. So that would keep it out the money. I don't like it being out the money, so I'll probably use a little bit less leverage. Maybe, I mean, 3-to-1 is not bad, I guess. 3-to-1 would make it at $9. So I need to find something that I can get in at $9. That would, at 28 will probably be the 26. This will probably be close to $9 at that point. This will probably be a little bit less than delta 70. It'll probably be like 68, 67 delta if we get to 28 or so. And then, so if we're getting to 26, if this is going to be $9 or so, that means our break even becomes 35. So then, we would want to sell covered calls above strike 35, which even on the 44-day, that's not that bad. That's not bad. I mean, most likely it'll be like in the 40 cents or so. So what is that? It'll give you like, it's like 6 to 7% for 40 to 60 days. I'm just anticipating all this could change, based on the Greeks changing when it sells off. But I'm just anticipating what the return profile and what the income profile would look like if we were to take this trade. Okay, so that's a pretty compelling reward to risk. I mean, the covered call selling, because the IV is elevated, it would be nice. So I think that's a very good strategy, and as we get closer and closer to that, I'll go over those strategies more. But I am looking at trying to get into some leap strategies with GDXJ. Some of the silver miners are also very compelling as well too, and I don't want to be taking individual company risks, so I might be also playing that with ETFs as well. The silver miners, I think, is also really compelling. Silver has just been on fire. I don't know about if you guys have been following this, but man, that's a massive move. That's huge. I haven't played with silver futures in a while. What is $50 for every cent? It's $50 for every cent. So what is that? $1.70, 170 cents times 50. That's 8,000. That's $8,000 a move. That's an $8,000 per contract move in one day. And the maintenance margin, initial margin, is $9,000. So pretty much like, yeah, that's huge, huge. That's like a 300-point move in the S&P 500 futures. It's like holding S&P 500 leverage futures for 300-point move. Oh my God, all in one day. Oof, that's crazy. But if the dollar, and remember, this is the day when the dollar collapsed, okay? This is the day the dollar collapsed. Silver just ran right up, right? Well, are we going to see the same thing in silver miners? I think it's pretty compelling, okay? Pretty compelling. For this one, we don't have the 800-day options. I just want to take a look and see what the skew looks like here. Skew actually doesn't look bad. This one I might even play call spreads on. Interesting. But it hasn't triggered yet. I want to retrace, okay? And again, I think it's really going to be dependent on the dollar here. Do we see a relief rally? I mean, that's a pretty strong relief rally there. Let me actually take a look at the dollar with our 18-day moving average and Bollinger Bands. I mean, I can definitely see, I mean, from before, when we've lost the 18-day moving average, let's see. When we lose the 18-day moving average, I mean, it's been on such a strong uptrend. It's just kind of scary to just take any position that does well when the dollar goes down right now, because the dollar, I mean, this it could just keep going up, right? It can make new highs, right? Maybe this was the pullback and an overall bullish trend in the dollar. And if that's the case, more pain ahead for the metals, all right? Which, again, I don't have a position yet, so I can wait. I can wait and be patient, all right? So maybe what we do, maybe we have to have a legging in strategy. Maybe we leg in after it retraces down, maybe to this lower 1 standard deviation Bollinger Band. And then we can also leg in some more if we go down. I don't really like legging into spreads, though. Spread legging in is like, that's a recipe for disaster. GDXJ, the retracement, oh wow, it's at the same levels right here. The lower 1 standard deviation Bollinger Band. For leaps, if it's deep in the money enough, I may leg in. And also because we have, what, for GDXJ, it's like almost 3 years, right? On those leaps. Yeah, 835, so a little bit over 2 years. I'm okay with that. Okay, and it's really far deep in the money. So, you know, I can live with that. That leverage, being a drawdown of that I can do. So we leg in small here, and then we leg in bigger later on. That might be in my plan. I don't know. I'll try to solidify my plan. There's no rush in this, guys. I think if it does retrace, it's going to take like a week or two. Okay? So There's no rush in this. I am, though, putting this on my radar, okay? So I just wanted to share that with you guys. Crypto, finally, let's get back to crypto now. Let's get back to the program here. Crypto, we're still seeing that huge negative delta, or I'm sorry, negative gamma at 1350, all right? We're still on that October 7th expiration. Something's going on there. A lot of people are short on that 1350 gamma, so we will see what happens. And actually right now I think the I think ETH is just bouncing around that level, right? I said don't be surprised if we just have a little gamma pin there. Didn't I say that? So it looks like that's playing out. Yeah, so we went a little bit over 1350. Now we're going a little bit beneath 1350. I wouldn't be surprised if we just kind of do that again for a little bit, okay? At least that's what the options position is telling me. Unless like order flow comes through and knocks it out that gamma pin, which is possible. It's possible. But right now, if you actually look at the OI, the OI is actually decreasing. Remember, it was at 6.8, 6.9 billion, then it dropped to like 5.4, 5.5, now it's at 5.2. So you know, OI is decreasing. I don't think there's that much order flow coming in. A lot of there's closing orders, and there's people basically aren't re-rolling those contracts. Okay, so there's net money leaving the market. So we'll see. That's all I can see so far on this. Let's see if there's any block trades. I think there was some November credit spreads, if I remember correctly, that got sold. Was it? No, calendar spread. I'm sorry. So somebody put in a decent sized calendar spread. Well, it's not that big, but somebody put in a calendar spread right here, 5,000 contracts, selling the October 1550 and then buying the 1700 call. So it's mildly bearish in the short term, but then bullish longer term. Okay, they're trying to harvest some of the closer dated IV and pay for a longer dated bullish bet. Still not that much money. The net outlay was I think the net debit is what, less than 100 grand. That's nothing. That could just be some dude in his mom's basement. Okay, so I don't see anything big coming out of ETH yet, at least in the options market. So again, plan hasn't changed. I still have those the ETH initial buy from 1241.46 turning out to be pretty good, and I will hold on to it and buy some more when we get to ETH gold ratio. Oh, by the way, you guys, I had some requests to go over oil. I guess the Saudis and OPEC Plus came out with the 2 million barrels per day production cut. I think that was today, right? That the announcement was made today. I don't know. I don't follow like the news like this. Was it today that they did this? Well, no matter. The reason why I don't look at the news is because it doesn't matter. Even though the news came out that 2 million barrels or whatever the hell, cut, look at how it's coming down after the news, okay? Guys, just because this news comes out doesn't mean it's going to like rip to the upside after the news comes out. Guys, come on. You think institutional trading desks didn't know that there was going to be a cut? I mean, it was all over the news. The media even knew about it, and they're always the ones behind the curve, guys. So come on, use some sense here, okay? It's not about the headlines. I mean, there is headline risk, of course, in oil, but those production cuts, you really think you were the only one that knew that they were going to cut? Come on, just be real, all right? So we're seeing it come down. The real buy level, remember, guys, I told you 75.77 was the buy zone. And I said, if you're long, remember yesterday, I said, hey, not a bad idea to take some profits. Remember, I told you that yesterday. Lo and behold, look at that. I remember some of you guys and some of the people on Twitter were saying, oh no, why take profit here? It's going to keep going up after the announcement. Yeah, right. Okay. Always manage risk. Risk management is always first, second, and third. Okay. So that is CL. Oh, I'm seeing some requests here. Okay, let's take a look at, so you want to look at all the stuff we have plans for? Sure. My plans still haven't changed, so I don't go over the same plans every day. If I don't announce a change, it means nothing has changed, but sure, we might as well go over it. Ford gapped up and it's coming back down. Good. I'd love to see those 11s or even lower. This is also a good candidate for leap strategies too, actually. So I might put this one on the Theta Thunder as well with the gold miners. Obviously, we want something cheaper. Okay, so if it does come down, we could see this deflate. That would be an option. Okay, this one also has a 625-day one too. That one's not bad. But the shares are so cheap. I mean, you might as well just buy shares if you've got, if you got $1,200, you can get 100 shares. That's not so bad. All right. So that's Ford. I'm still waiting for those levels. Hut. Coming down. Okay. We'll see. We'll see what happens. It does this. Hut has these big moves. Okay. This was a really bad experience. Remember when I sold covered calls here? Remember that, guys? I said, oh, this is the top. This is going to be a local top. And then what happened 3-4 days later? I mean, remember that? Oh, that was disgusting. That was disgusting. So for Hut, I'm going to be a little bit more judicious on my timing on when I sell covered calls. I want it a little bit higher. If we don't get it, so be it. So be it. It's fine. Okay, it's fine. I'm still ready to buy some more. If it gets down to 130 or so, I'll double up on my shares. That hasn't changed yet. Intel, I gave you guys warning on Intel. Intel could still keep going down if TNX goes up, the 10-year Treasury. So if we still see 10-year Treasury making higher highs, I mean, this could come down even further. Intel also. I mean, for me personally, I'm going to be using shares to get into Intel. But if you guys feel very compelled, you can use a leap strategy too. So maybe I go over a leap strategy too. So we have 3 cases for our leap strategy already. We got Intel, we got Ford, maybe not Ford. I don't know about Ford. Ford is kind of iffy, and the gold miner ETF. So Intel, I'd like to see it get a little bit low. I'd like to see a retrace. And if our liquidity data still remains strong, that may be an opportunity to get into some leap strategies. But honestly, with leaps too, I kind of want, especially with the tech stock, I want to see a MOAB signal, the mother of all buy the dips. I want to see the New York high-low line go up. I want to see that, because just because it goes up for a couple of weeks, I mean, it could come down and make new lows, right? Just like here. It could go up for a week or so and then come back down and make newer lows and drag on. And that is the killer of leap strategies right here, something like this. So for a tech stock, I don't know. I don't know if I want to add this to our leap strategy now that I think about it. I think gold miners is just a little bit different just because where we are in the macro scheme of things. But for Intel, this one I really prefer shares. So if I see a retrace, I might leg into some shares. But the big buys are going to happen a little bit lower if the TNX keeps going up. So my eyes are glued on TNX right now, okay? TNX, this is the chart to watch now, okay? So going from ZF, now I'm going to TNX. Now this is the important data to watch, the longer-term maturities, okay? This is the chart of the day, TNX. All right, what else do you guys want to see? Anything else? Any other requests? Oh, you know what? I got this request on Twitter. Okay, so Twitter made a huge, massive move yesterday, right? Massive move, massive. Look at that, from $42 to $52 on Twitter, on FinTwit, as well as via DMs. Some of you, particularly one of you, asked me, why is it that your out the money call did not go up and actually went down after the news? Why is it? And it was longer dated too, so it's not like it's only like 1 day expiration. I think the example that the one of our members showed me was either November or the December. I don't know if you are able to DM me. I don't see it. Okay, so anyway, if you want to DM me which strike it was, let me know. But anyway, so this right here, the reason why, even though Twitter went up 20%, why did your out the money calls did not go up? Is because the buyout price is at 52. It's like 52 and some change, right? So that means theoretically, the price of that stock is not going to go over 52 and whatever that buyout price is, or what 52 and X, all right, whatever that is, right? So all those calls after with strikes that are higher than the buyout price automatically become worthless because Elon's going to buy this at a lower price than those strikes. It's not for a price greater than that. So it makes all those calls worthless. Okay, because it's not going to go over that, all right? And that is why your calls failed. It's because the buyout price was announced, and anything over that buyout price, it becomes worthless, all right? That's November's. You can go to January's. Look at the January's. Look at that. You know, for what? For over 2 years, your 55 strike calls are only 40 cents. I mean, come on, that's pretty much worthless. It's pretty much like the risk of him backing out of the deal again. Basically, that's the price of him backing out of the deal the second time. And what is the chances of that? Well, the options market is pretty much telling you there's almost no chance of that. All right, or at least very, very little chance of that. That's what it's pricing in. So that's why your out the money calls went to zero. Anything over that 52 and whatever, those are going to zero. Those, you know, practically are zero. Market's pricing in that the deal's going through. The chance of him backing out a second time is really low. That's part of the game. That's why you don't gamble on a name like this. Okay, anything Elon related, I just don't play it. You know, I just don't, unless we get really, really good levels, like institutional trade levels, like Tesla at our red line. Okay, institutional dumping happens here. Okay, we saw it here, we saw it here. I'm just saying, will it happen here? Maybe. Maybe this time it could be different. I don't know, but at least risk is managed, right? So outside of that, outside of these really nice, high probability trades, anything Elon related, I just don't do. All right, moral of the story. Anything else you guys want to look at? Going once, going twice. Sold. Okay, that concludes today's session of the Market Memo. I will be back tomorrow at Market Open, and we'll do our Thursday session then. Again, the links to our Discord is in the description. Come join our Discord. Be part of a growing community. There's no sub fees, no paywalls. Of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment, show us some love. All right, guys, I'll see you guys tomorrow.